Greetings and welcome to Metals and Miners. I'm your host, Gary Bohm, and we've got an incredible episode lined up for you today. We're thrilled to welcome Simon Clarke, the President, CEO, and Director of American Critical Minerals, to the show. American Critical Minerals holds the Green River Potassium Lithium project that's in Utah's Paradox Basin, a site that could be among the largest potassium lithium sources in the U.S. With nearly 3 decades of experience, Simon has a proven track record of building companies and driving success in mining, energy, and energy tech through savvy capital markets and growth strategies. Simon, it's an honor to have you join us on Metals and Miners. Thanks for being here.
Thank you very much, Gary. It's delighted to be here.
So, Simon, let's begin with a brief overview of who American Critical Minerals is and what the focus is on.
Yeah, American Critical Minerals is a company with as you point out, the Green River project in the heart of the Paradox Basin in Utah. The Paradox Basin is the only super potash basin in the U.S., and a super potash basin is usually described as a basin that could produce upwards of 1 billion tons of potash. So, there's 9 of them globally. They tend to be where the grades are best and the amount of potash available is the highest. And the Paradox Basin is such a basin in the U.S. It's the only one. So it's a known producer. As you said, we have Intrepid Potash producing very close to us, and we're in the heart of the major potash zone there. Intriguingly enough, over the last several years, lithium brines have become a big focus as well. So this project very much started out focused on potash, but a lot of heavy lifting has been done around us, and lithium brines have a lot of potential moving forward as well.
Wonderful. All right. So how did the executive order recently that President Trump signed regarding critical minerals positively affect American Critical Minerals, if at all?
I mean, obviously directly on the lithium side, because lithium is a critical mineral. Obviously, the supply chain globally is dominated by China. And if we truly are going to electrify our fleet and bring energy storage successfully into the electric grid, then we need lithium-ion batteries. I mean, people talk about other storage mediums, but lithium is the lightest metal. It's the ideal metal to be part of the chemistry, and so I don't see that changing. And clearly, we need to develop sources of domestic lithium. I mean, we produce way less than 1% of the raw material globally. And then potash used to be on the critical minerals list. It is in a number of countries, including Canada. And the US is dependent, some people estimate up to 95% of all potash is imported into the US. Now, a chunk of that is from Canada, which has historically been a close neighbor, but obviously who knows with tariffs. And over 40% of the world's supply comes from Russia and Belarus. So clearly it's a critical mineral. Donald Trump's nominee for the USGS has made it very clear that he wants to put potash back on the critical minerals list along with uranium and copper. So I think you can see where it's headed.
Awesome. So, Simon, food inflation has been on everybody's mind. It's been a significant problem for the bottom 60 to 70% of income earners. Potash plays a role. Do you expect it to continue in terms of food inflation indefinitely, or is there some relief coming?
Yeah, I mean, listen, I think the greater the potash use, it's been proven to show that it makes the production of core food types more efficient. I mean, if you don't use potash, the soils deplete, the amount of crops you can produce falls, the amount of disease you get grows, and so there is no doubt that securing sources of potash domestically will help make our food industry more efficient domestically. And right now, obviously, like I said, 95% of potash comes from overseas markets. So, I think Intrepid in their latest results forecast that the dividend, if you like, for producing potash locally is in the order of $70 to $100. So you can see that if we have to pay tariffs on top of that and for imports, it's just going to make the cost of producing crops more expensive.
Yeah. So, what macro trends can you point to in both the potash and lithium industries, as well as some geopolitical shifts globally that are now creating a more favorable environment for U.S. domestic lithium and potash production?
Yeah, well, I mean, obviously the tariff side of it, when you're reliant on overseas sources I mean, if you put tariffs on that, it's obviously going to make the cost of those imported goods more expensive. So the need to secure domestic sources is more and more. I think you layer onto that, and certainly on the lithium side, the Chinese influence and the desire to break their grasp. I mean, we've seen with antimony and other minerals that the Chinese can just turn around and say we're not going to export that. Well, if that happened in lithium, then we'd have real troubles. And then you roll that out to potash. Now, as I said, Canada's historically been a strong ally, but question marks around Russia and Belarus and other sources of supply as well. Do we want to be dependent on them for our food security? So there's lots of geopolitical tensions and issues that I think are making this more interesting. And I really think the underlying theme, whether you're in North America, South America, Europe, or wherever, is you've got to find domestic sources of supply. I mean, I look at potash, for example, and there's strikes in Canada for transportation. There's tariffs, and then you look at Belarus and Russia. There's conflict, and so you don't want to have to say to your farmers, well, sorry, we can't get you any potash right now because of what's going on in the world. So clearly, there needs to be local support sources of supply for these key critical minerals.
Yeah, well said. Okay, so Simon, share with us some highlights of the lithium deposit and your projections for production versus demand over the next several years.
Yeah, so I mean, for us, this project started as potash, and that's what we've really focused on. Fortunately, there's a number of players in the Paradox Basin that are unlocking it and proving the potential to secure lithium. So, Anson Resources has a project directly south of us, which is at definitive feasibility stage, and they're partnered with Koch Industries to the north piloting. So there's a lot of heavy lifting going on for us by our neighbors, but we know from the historic drilling on the oil and gas side that was done across our land that we have the same underlying lithium brines. And I believe ultimately that lithium brines are going to be one of the most cost effective sources of lithium. You look at some of the traditional mines that need billions and billions of dollars of capex to build and multi-year projects. I do believe that there's significant potential from the brines. So, I think as we move forward here and these projects get proved up, I think the ability to bring on meaningful lithium supply from the lithium brines, not only in the Paradox, but the Smackover and other basins around North America is going to be bigger and bigger. Um, yeah, sorry.
Oh, no, go ahead.
Sorry.
Do you have more to share there?
Well, and then I was just going to say, obviously on the potash side, the Paradox is the only super potash basin in the US. There are other sources. Utah tends to have a lot of those other sources as well. It is the number one ranked jurisdiction for mining investment globally in 2023 by the Fraser Institute for good reason. So we have these assets there. It's now time to develop them. And I think again with the critical minerals capital that the government is starting to put into play, but also the strategic interest in these projects, I think we're going to see an acceleration here to bring these projects online.
So you don't have a target date yet, that I'm assuming?
For us, really, I think the next phase for us is get our confirmation drilling done, turn our exploration targets into defined resources, and I think as we move forward, a lot of capital is going to come from strategic sources. As I said, the government is putting money into critical minerals. I think that will accelerate, which will help. I think the permitting infrastructure, certainly under this new government, will be a lot faster, and hopefully they will target critical minerals, as they said. So, I'd like to think if we can convert this to a resource, raise the money through strategic means, you could be producing potash and lithium within 4 to 5 years. Now, as you know, history tells us that to build mines in the US has been a lot longer than that. But I think, given what we know about the Paradox Basin and the amount of minerals there, we've got a head start. We know it's there. We've now just got to define it and then get the permits finalized.
Okay. And you mentioned about the scope, the scale of the potash deposit that's there. It's the largest in America. What are some other key project advantages that you could point to for some interested investors?
Yeah, I think Utah, as I said, is a key mining jurisdiction. The fact that we have Intrepid, the only producer of MOP, muriate of potash, in the US, is right next door. So we know that this basin works. We know you can use solution mining, which is the most effective way to produce potash. And, because of them, we're also very close to rail infrastructure. We're very close to road infrastructure. The ability to mine and process these products, the infrastructure's all there, and then the network to get them out to the agricultural heartland of the US, and also the industrial heartland on the lithium side is all in place. So it's not in the middle of nowhere. It's not greenfield. It's very much brownfield, and we can accelerate and ideally get these products to market, in a shortened time frame because of that.
Okay. Share with us about your expected industry growth as you're leading up to production. It could be 4 or 5 years, as you said. What kind of industry growth are you expecting leading up to your point of production starts?
Yeah, so I would say, I think the main metric that is out there is that agriculture in the US is growing at a 5% compound annual growth rate, as are the products that supply that, including potash. So I think, the domestic potash demand is going to continue to grow. I would like to think that there's going to be more focus on domestic sources rather than just continuing to import from, places that may not have our best interests at heart. So I think that's really going to play into the mix. So overall growth, and then global growth in potash. As I'm sure you're aware, there's large parts of the world where the farmers aren't able to secure potash supply. So the global growth looks even better than that. So I think the macro trends for potash, for food security, are really strong. On the lithium side, any forecast you see, I think people in the last year or two have questioned whether demand growth is as predicted, but there's no doubt that demand is still growing exponentially. Okay, maybe it's not 20% a year, maybe it's more like 10. But I don't know. I mean, everywhere I go in the world, I see more and more EVs. I actually think the performance of EVs is way better than internal combustion engines. I think it's just simply down to economics. You got to get these products to a price point where the mass market can adopt them. And I think we're moving there, and I think that will help. So I think lithium will stabilize and move back up. I don't think it's going to go back to the crazy prices we saw a couple of years ago, which, quite frankly, doesn't help anyone. But I think it'll go to a sustainable level that will help us get these vehicles. I mean, we can knock the Chinese all we like, but BYD produces excellent vehicles at a third of the price that we pay in the US or Canada for electric vehicles. So I think as we move forward here, that's really going to help. And I think we're going to get to a tipping point where it makes a lot of sense. And then I think on top of that, we know we have to strengthen the electricity grid in the US. And I think, large scale storage is going to be a big piece of that as well. So I think the future is very bright for both commodities, especially if we're going to make sure that we have critical mineral supply chains that are not dictated to by overseas regimes.
Okay, let's turn our attention over to your company as an equity to potentially purchase, for interested investors. Simon, why does American Critical Minerals present an intriguing opportunity for investors seeking exposure to lithium, potash, or even other, commodities in the sector?
Yeah, I mean, I think American Critical Minerals is very unknown. I mean, I joined it in September because of that. I saw an opportunity. I was the CEO of American Lithium before that, and the backers of American Critical Minerals are guys that I know and trust. They find really good projects, they stick with them, they continue to fund them. And it took 8 years for the company to get federal prospecting permits for potash. It's different from other minerals. There's a big environmental piece to it. So the company really is very unknown still at this point. And really why I was brought in was to spread awareness, get some marketing out there, get people to know what we're up to, and then obviously make sure we can raise the capital to do the brownfield drilling, which is a major milestone for us. So I think for investors, this is still a very undervalued company that offers two, not just one critical mineral, large scale, and with lots of milestones coming up. And I think a macro and domestic environment that is more and more favorable for those critical minerals. So I think it represents really good value.
Okay. Is the game plan for American Critical Minerals long term to merge with a company similar to like Intrepid Potash or another group like them? Or is the plan to make American Critical Minerals more of a major, mid cap producer over time?
Yeah, I mean, I think you have to develop companies so that you could go either route. I mean, my view is if you look at mining, and you get it to a stage where you've obviously got that crossroads. Do you bring in strategic money? If we're going to build a project that can produce 1 million tons of potash a year, and 20, 30,000 tons of lithium, those are big numbers in terms of capex. And I think we have the team. We've got a really strong board. We've got strong operators involved. We've definitely got the team to drill this up and de-risk it. But ultimately, if you're going to actually build a mine and processing plants, then that's a lot of capital. And as we move forward, I think bringing in the right strategic partner to help you do that, and which could also lead to either selling the lithium or the potash down the road, then that's likely makes more sense. But I think you move forward with the possibility of doing both. I mean, my history has been one of developing projects and then successfully selling them to majors or other strategics. And I think in the mining business with those deep pockets and the knowledge of building mines and processing plants, that probably makes the most value for shareholders. So, if I look at it, we're in that sweet spot where we know from the historic data what we've got. We haven't proved it yet with our own drilling, which I think we can do quickly and efficiently. And then, we can put together independent studies, resources, big milestones, and get it to a point where we've just de-risked it to the point where there is going to be significant strategic interest. I mean, we're already seeing that. We have had a couple of offers on the strategic side to invest, but I'd rather see us, stay independent and move our stock price where I think it should be through some relatively, straightforward milestones that I know we're fully capable of hitting.
Okay. So, Simon, are your management team members net buyers, net sellers, or neutral of the company stock over the last 12 months?
We would be definitely net buyers. The company did have a management change out and board change out, which started probably 12, 15 months ago. When I came in, I changed out the board and brought in my own team of people, industry players that I trust. We have other CEOs from other critical minerals companies. We have a guy who's very well connected into US government and state funding. We've got strong operational people. And, since I've been involved, we've done two relatively small financings, and a big chunk of that has been done by the management and board. And that continues to be the case. So definitely net bias. The original geologist who put this together, I don't think he's ever sold a share, and he's been a shareholder for 12 years, and and the key backers from on the shareholder front, who probably still speak for 50 to 60% of our stock, continue to support it at every stage. So definitely net buyers, and continue to see lots of opportunity here. I mean, this is the reason I got involved, is the quality of the people behind it and the strength of the asset.
This has been a wonderful conversation so far. Hey, everyone. Welcome to the fantastic interview we're having with Simon Clarke, the president, CEO, and director of American Critical Minerals. It's been an amazing discussion. Before we wrap up here and we ask the final set of questions to Simon, I just want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community and receive a free report titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio. Consider upgrading for access to premium content. All premium content provides a comprehensive analysis of global trends, asset sentiment, and deep dives on individual miners for more informed decision making. But even without premium, there's plenty of free content daily. So visit metalsandminers.substack.com to join us and explore. Thanks again for watching this interview. Now, I'm positive you've enjoyed the conversation with Simon as much as I have. Please let him know, hit the like and subscribe button, and leave a comment below the video. All right, Simon, let's finish off our discussion with what I call a lightning round. I'm going to ask you to rank a few assets as a buy or a sell by giving it a score of 1 to 100, with 100 being an extreme buy and 1 being an extreme sell, and then just give 1 or 2 sentences as to why you take that position. And if it's an asset that you're not following, that's okay. All right?
Absolutely.
All right. On a scale of 1 to 100, is gold a buy or a sell, and why?
90 buy. It's just the price of gold has moved so much that and the stocks have not really followed suit, certainly at the junior end. And in certain times, I still think it's one of the best assets to hold. So I'm bullish on gold.
How about gold miners, 1 to 100?
Yeah, I think it would be the same. Probably more on the junior end. And I know that's might be biased because I've spent my life in the junior end, but I think right now there's more value there that just has not been reflected in the movement in the commodity.
Okay. Silver, 1 to 100.
Silver, I think, is probably 95. I think that's even more because, it's not really close the gap on the historic ratio to gold. And silver also has industrial uses, which I think are very intriguing. So to me, it has both the precious and the industrial side. And again, it has not followed suit to where it should, given where gold has gone.
How about the miners, the silver miners? Do you feel the same?
Absolutely. Yeah, no, I think there's, even more than the golds, I think they're more undervalued than they should be.
All right. Let's move over to copper, 1 to 100.
98. I'm a big optimist, as you can tell, but everything that the world needs copper. I was in a conference in Rio de Janeiro recently on fertilizers, which was intriguing. You might think it's a bit of a dull topic, but I met the head of BHP for South America, and their total focus is copper and potash in South America. And I think copper, the majors are scrambling to figure out where the next copper potash projects are coming. So I'm a huge believer in copper.
Interesting. Okay, uranium 1 to 100.
Uranium's probably not quite as high as copper, but probably still a 95. I just think I am chair of a uranium company called Myriad Uranium, which a good friend of mine runs, and it's in Wyoming. But I just think, the US needs 50 million pounds a year, and it produces less than a million. So I think domestic uranium in particular, but I think it's clear now that uranium should be a huge part of the energy mix going forward.
So we'll get back to a few more of these, but before we do, just staying on uranium, a lot of people have soured on the uranium investment as it has plummeted over the last few months. What would you say to those people regarding the thesis and the supply demand imbalance?
I think the fundamentals for uranium get stronger. I think in the short term, you've seen a lot of restarts that have perhaps covered the demand. But I think long term, we're not seeing any of the major utilities or players really putting orders through that I know are going to come. And then you factor in the whole AI and distributed power piece. I just think this is a short term blip. Maybe it ran up too fast as commodities are wont to do, but I think long term, well, medium to long term, to my mind, it's going to be a huge winner in the energy mix.
Okay, I appreciate you going off that little beaten path for us. Going back on to the uranium miners, 1 to 100.
Yeah, again, I think especially at the junior end, there's lots of value. So I would follow up with the 95 that I have on the commodity.
Okay, how about oil?
Oil, and I did spend time in the energy world in my younger career. So I'm a big fan of oil. I'd maybe put it at an 80. And the reason for that is I think it's probably higher than that in the short term. I mean, I think all those people that felt the energy transition would just happen overnight, we're still, the demand for oil and gas continues to increase. I think unfortunately, it's not PC to own oil stocks at the big level, and so you've seen a lot of smart investors leave oil, which makes me scratch my head. But then there's a lot of very, very smart guys quietly following oil. As I say, it's not PC to do so. And I do think we're going to need, it's certainly in the next 10 years, more oil and gas.
Yeah, I would say one of those smart guys might be Warren Buffett.
Yeah,
Um,
absolutely.
all right, let's move over to the Nasdaq, 1 to 100.
Yeah, I mean, I'm not, my sense on the Nasdaq, obviously, it follows the tech side of stuff, and I do think there's lots of growth in AI. I'd maybe give it a 65. I think a lot of the other technology stocks have maybe gone too high too soon, and obviously we need to see a rebalancing of that. But I do think, I mean, there's no doubt AI is going to make a huge impact on the world, and I think overall the Nasdaq should be positive. I mean, obviously there's lots of uncertainty right now from macro events and change in administration, and the market hates uncertainty. But long term, I do think technology is going to be one of the key drivers.
I would agree. All right, how about the S&P 500?
Yeah, that's a little bit more difficult for me to call. Yeah, I mean, are we gonna have a recession with tariffs and inflation? So I'd probably be somewhat neutral on the S&P.
So maybe around 50.
Yeah, yeah,
All right, let's look at short-term treasuries and then long-term treasuries.
yeah. Listen, I think there's some short-term pain, so I probably wouldn't be you know, I probably wouldn't be long. I mean, it's a difficult one because if interest rates do come down further and everything else, um,
Are
the,
you parking some money in short term? Are you willing to do that? Six
I,
months to a
I,
year?
yeah, I mean, I would. I think short term, and because I mean, treasuries and cash in uncertain times are not a bad thing to be in. Longer term, though, I do think there's going to be good value coming back to the market, and I think equities will outperform.
All right. So if you just had to put a number on short term and long term, would you be more of a buyer, like 75 on short term, and more of a
Yeah,
seller?
yeah. I think short term at 75 would be a good number, and long term maybe 40.
Okay. All right. And finally, on a scale of 1 to 10, with each representing a percentage like 1%, 2%, or 2.5%, you could even do a range. Where do you see inflation ending the year?
Yeah, I think short term it probably it will go higher. I don't know. Probably a couple of percent higher than it is right now. Um, would be my guess. I do think interest rates will come down further than maybe people think as a result, and it'll probably come back under control. But I think all the pressures that I see right now are inflationary, and
So you're saying it might go up to as high as 5% in the short term, but maybe pull back by the end of the year, or are you saying short term would be the end of the year?
no, I think by the end of the year, it's maybe it maybe sort of spikes in 6 months or so from here, and then starts to come back under control. So still relatively high at the end of the year. I would think a year into this administration, maybe you see it get back to the bank's range,
Okay.
target range.
Oh, so you're saying maybe around 2%, back to 2%.
Yeah, maybe three. I'm not sure 2% in today's world is realistic.
Mm-hmm.
Um, but maybe more like 3% long term with low interest rates. We're definitely in a different world.
Yeah.
So
So
historic norms.
do you think that spike up to that 5-6% range you're talking about might propel the Fed to come in and lower rates?
I think so.
Okay. All right. Well, hey, Simon, this has been a lot of fun. Thank you for coming on to Metals and Miners, for being so generous with your time, analysis, and ideas. Would you let everyone know where they can learn more about your work, about American Critical Minerals, and how they can connect with you guys?
Yeah, I mean, we have a pretty good website on www.acmineralscorp.com. Please feel free to reach out to me at Clarke, SCLARKE, at acmineralscorp.com.
Okay.
Be very happy to get back to anyone.
Yeah, wonderful. I will put that information up and I will have it as a click through in the description area for everybody so they could just go ahead and click on through to you. I appreciate you coming on and sharing all about American Critical Minerals. It's an exciting time, and I enjoyed meeting you, and I look forward to having you back on sometime soon. And everybody else, thank you for watching.
Thanks, Gary. Cheers.
Everyone, welcome to the fantastic interview we're having with Simon Clarke, the President, CEO, and Director of American Critical Minerals. It's been an amazing discussion. Before we wrap up here and we ask the final set of questions to Simon, I just want to direct everyone interested in the metals and mining sector and investments to dive into our Substack at metalsandminers.substack.com. Join our community and receive a free report titled, "If You Don't Own Gold, You Know Neither History Nor Economics." That's a famous quote by investing legend Ray Dalio.